It was a regular morning on Wall Street. Stocks were ticking along as usual, billionaires were billions richer, and markets were stable. But that calm didn't last long. Just a few hours later, the world's richest individuals lost a staggering $208 billion in a single day. All because of one announcement: new tariffs by Donald Trump. That's right, a few words from a former president wiped out enough money to fund entire countries. But what exactly happened? Why did these tariffs hit so hard? And what does this mean for the future of billionaire wealth? Let's break it all down. Now, billionaires are used to making or losing a few $100 million on any given day. It's part of the game. But losing over $200 billion collectively in 24 hours? That's not normal. That's a shock to the entire system. We're talking about some of the most powerful people in the world: Elon Musk, Jeff Bezos, Mark Zuckerberg, Bernard Arnault, Warren Buffett, all watching billions vanish from their net worth. And the worst part? It wasn't due to any mistake they made. It was entirely out of their control. This is the story of how one policy decision created the biggest single-day wipeout in billionaire wealth in recent history. The trigger: Trump's tariff announcement. The whole thing started with a surprise press conference from Donald Trump. Standing behind a podium with American flags in the background, Trump announced a new wave of tariffs on Chinese imports, saying it was time to protect American industries from unfair competition. The tariffs included a 10 to 25% tax on everything from tech components to raw materials to finished goods. Investors knew what that meant: higher costs for companies, slower trade, disrupted supply chains, and lower profits. And just like that, the markets panicked. The fallout: $208 billion gone almost instantly. Stock prices of major companies plummeted. And when those companies are owned by billionaires, you can imagine what happens to their personal wealth. Let's take a look at some of the biggest losses. Elon Musk lost about $18 billion as Tesla's stock dropped sharply. Investors feared rising costs for EV production, especially with parts sourced from China. Jeff Bezos saw around $16 billion wiped from his net worth. Amazon relies heavily on imports and global logistics, and any disruption spells bad news. Bernard Arnault, the luxury king behind LVMH, lost $11 billion in one day. Luxury goods sales are highly sensitive to global tensions, especially between the US and China. Mark Zuckerberg lost nearly $10 billion as Meta shares took a dive, reacting to broader tech market instability. Even the legendary Warren Buffett wasn't spared. With significant holdings in industrial and manufacturing companies, he saw his wealth dip by $9 billion. In total, over 300 billionaires saw their net worth shrink, and the combined loss hit $208 billion before the market closed. Why so extreme? So why did this announcement cause such an intense reaction? Because tariffs, in simple terms, are taxes on imports. And when those imports get more expensive, companies either 1. Eat the cost, which kills their profits. 2. Raise prices, which lowers sales. 3. Or slow down production, which leads to layoffs and less growth. And guess what all three of those outcomes have in common? They're terrible for the stock market. When big investors see uncertainty, they pull their money out fast. And when they do, the value of companies, and by extension, the net worth of billionaires, crashes. The China response. Of course, China didn't sit back quietly. They hit back with their own set of tariffs, targeting American agriculture, manufacturing, and tech. It was a classic case of, you hit us, we hit back. This created a full-blown trade war, and investors were caught in the crossfire. Stocks tanked globally. The Dow dropped over 1,500 points. The tech-heavy Nasdaq saw its biggest one-day fall since the COVID crash. And fear spread across Europe and Asia. It was no longer just about one country's policy. It had become a global financial event, not just the rich. While billionaires were the headlines, millions of regular people were affected too. Retirement funds, 401ks, pensions, all tied to the stock market, took a hit. Companies froze hiring. Some even announced early rounds of layoffs. and businesses started warning customers about price hikes coming soon. Tariffs may start as a tax on imports, but they end up hurting everyone down the line, from billionaires to workers in small towns. Can billionaires recover? Short answer, yes, and most of them already did. Stock prices fluctuate, and when things settle down, whether through trade negotiations or market corrections, billionaires often bounce back fast. Some, like Musk and Bezos, saw major rebounds in the weeks after the tariff shock as investors saw opportunities to buy the dip. But this event showed that even the richest people in the world are not immune. They may have private jets and mega yachts, but at the end of the day, their wealth depends on something as fragile as market confidence. So what's the takeaway here? When billionaires lose $208 billion in one day, it's more than just a financial story. It's a reminder of how interconnected the global economy really is. One political move, one policy change, one trade war, and the dominoes start falling. It also raises deeper questions. Should we be concerned that billionaires hold so much wealth tied to unpredictable markets? Are tariffs really helping the economy, or just triggering panic? And how can everyday investors protect themselves when even billionaires can't? Because in a world where $208 billion can vanish in 24 hours, no one's truly untouchable.